I'm Jeff Holden, Head of Recruiting at SMB Capital. SMB Capital is a proprietary trading firm trading stocks, options, and futures in Midtown Manhattan. Today we're going to cover this really important concept with Alex of how to really make more money when you're right. Not by adding more risk, but just by improving your exits. So we're going to map out a process that Alex is using to improve your exits on trades.
For this trade, this was a changing fundamentals day one scalp trade. The vehicle that we were choosing was Facebook. It was gapping up on earnings. So this was a day one scalp, and the day was 428. So for the trade strategy and tape, I built we want to build a thesis plus play in your playbook plus see the turn in the tape plus fight for low risk entry equals one good trade. So I built a thesis that Facebook could be in play for a day one changing fundamentals momentum scalp after it gapped up over 20% after earnings into a declining 50-day moving average. I built one actual plan for this trade, and I was actually willing to pass if this plan did not present itself. Since we're opening up 4 points, so the previous session, I was watching all the earnings and just kind of looking at how stuff was reacting, and I noticed that Facebook had gapped up 20% on their report, and they were gapping up, right into a declining 50, a little bit above, a little bit below. So I was thinking, if we can open up at that 50 tomorrow, that would be a great level. So then the next day when I got up, we were opening up 4 points below that level. It moved down in the pre-market. So since we were opening up 4 points below the 50-day moving average at 204, my plan was to short Facebook only if it could get an opening drive into its 208 level, which was the 50-day moving average, using the high of the pre-market 210 or high of day against the 50-day as levels to manage my risk. I also needed to see the bid slow up and the offers start to step up at this level, as this should be a natural spot for some profit taking for larger players after a 20% move in one day. That natural selling is what I'm looking for to scalp. My first cover should be into 1 ATR, and there is no other situation I'd be interested in playing this name on this given day. So if this wasn't able to trade up to the 50, I would just let this pass and try to look for something that has a higher opportunity set. So indicators I was looking for in the tape, I'm looking for bids dropping off and offers stepping up at the key daily time frame level of 208. I'm looking for elevated R-vol on open. I'm looking for big bids and offers in the level 2. I'm looking for strong sell programs or buy programs in the tape. And then I'm looking for builds above or below VWAP. And then for my risk tier system, this is something that, I'm trying to develop more and more. I want to always kind of grade my trades and then be more aggressive on my lower probability trades and most aggressive on my highest A+ trades, as Bella would say, right? So based on edge and opportunity set. To me, this was a C cash flow trade. So then going through my tiers, I have A, this is a top setup that you really see it and you have massive edge. And this is a setup that I would be willing to risk 25 to 100% of my daily stop. And then I have a B, which is a mid-tier setup, missing a few traits of a top tier setup, but still really see it. That'd be a 10 to 25% of my daily stop. And then for this trade, this would meet the C tier, which is a lower tier system, but still I have real edge and I'm just looking for some cash flow. I'm only going to be risking 3 to 10% of my daily stop. So then reasons to sell in this trade, profit taking. If my profit target is reached on any VWAP extensions, or if the stock can make a 1 ATR move, if sellers can keep if sellers cannot keep Facebook under its key VWAP level, unusual buyer shows up in the tape, a time stop, higher lows and highs in the tape, and then offers dry up away from VWAP. Reasons to sell, risk reduction. Buyers recapture the AVWAP and I'm stopped out for a loss. If I move my stop to break even, a VWAP was lost and I scratch after the stock regains and builds, or an unusual buyer in the tape.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So in big picture, I always like looking at the percentage of stocks that are above their 200-day on the NASDAQ. I think that gives, you know, a really good indicator of what kind of liquidity is in the market and what types of playbooks you want to be going after in the market, right? Big picture, we have a hawkish Fed that is unwinding its balance sheet and raising rates to fight record inflation. The QQQ index is under its 250-day moving average. We have interest rate risk. We have asset deflation. We have geopolitical tensions in Europe with Russia and Ukraine. And then at this time, the NASDAQ comp stocks above their 200-day moving average was at 22%, which to me is very low. And the VIX was elevated at 30. So, you know, higher volatility environment. And then so big picture, here's a picture of the QQQ. The QQQ has been in its down cycle since January 5th when it lost its 50-day moving average. QQQ coming into the day was holding new lows of its range under 224 and 314 key lows. So it was holding lows under previous lows from March and February at 317.70 coming into 428, like I said. So I was being very cautious for any short covering rally anytime we undercut key lows and we start to get really extended from that 10-day moving average, as this is a logical place for shorts to start to cover. And, you know, I think that can provide opportunity to get kind of chopped up. So if you're super biased, you know, that can provide opportunity to get chopped up anytime you're super extended from the 10 and you're, you know, really short bias. So that was just making me lean more towards a scalp over a swing on Facebook off the 50, just knowing that, you know, on any short covering rally, I could get stopped out if I was choosing a swing method. So then this is the big picture sector, XLK. XLK has been in a stage 3 sideways choppy downtrend since price lost its 50-day moving average on January 6th. My chart is a little, I don't know why it's off-centered, but I was just highlighting that it was undercutting key lows from February and March, trying to build under these levels. XLK is currently under all of its current moving averages and a downtrend with a head and shoulders look. And then let's get into intraday fundamentals. The 52-week range on Facebook is very wide, 169 to 384, 33. So just want to note that because, you know, there's a lot of supply coming off the high. So sellers are going to want to, you know, be looking to, you know, sell into this at that 50-day, in my opinion, just as a natural spot. At this time, Facebook had an average true range of $10.13. The AVOL was 35.8 million. Institutional ownership was very high, something that, you know, really important to me. 79.5%. The short float very low, so not really relevant at 1.2%. The share float 2.29 billion. The VIX at this time is 30, so very elevated. And then the market cap of Facebook was 573 billion. And then just some highlights from their earnings. Facebook parent Meta soars 16% after Q1 results show user growth recovery, and Mark Zuckerberg reins in metaverse spending. So basically, their last earnings, they were spending a lot of money on the metaverse and, you know, new innovations, and the market did not reward that, and they had a massive gap down. So the market, in my opinion, did favor that they were spending less money on the metaverse and spending less money on innovation. CEO Mark Zuckerberg said he's slowing the pace of investments in his new projects, including the metaverse we just talked about. The social media giant reported earnings per share of 2.72, above expectations of 2.56. So that was a beat there. In its financial update released after the market closed Wednesday, quarterly revenue came in at 27.91 billion, missing analyst average estimates of 28.2 billion, just by 0.3. And then it reported that daily active users rose by 3 million from the last quarter to 1.96 billion, beating analyst expectations of 1.95 billion. CCS Insight analyst Martin Garner noted that growth in user numbers helped spark a stock move, even though Meta's advertising revenue and profitability declined more than normal in the first quarter seasonal drop. In its last financial update, the company reported a drop in user numbers for the first time, shedding roughly 1 million daily active users between the third and fourth quarter. So off that, its stock fell 22% on the wake of that report. So when it fell 22% on its last report, the two main things that we were paying attention to, or that I was paying attention to, are just, you know, the daily active users and then how much they were spending on the metaverse. And so the fact that they reported a growth this quarter and reported that they were spending less on the metaverse, I think that's what, you know, kind of allowed Facebook to have this gap up into the 50-day. So then this is the daily chart on Facebook. So I'm just going to go through 1 through 5. So one, Facebook entered its stage 4 decline on September 17th, 2021 out of a head and shoulder-ish pattern. And then two, I just was noticing these little subtle unfilled gaps in Facebook after it's lost its 50-day moving average. To me, this is just a huge sign of big players wanting out. They just really want out, and there's just a lot of supply in the market. Three, you can see that we were talking about that big gap that it had after its last earnings. So a large unfilled gap is a huge sign of supply in the name. After brutal earnings, gap down, the street hated the extra spending on the metaverse and the slower, user growth. Four, name barely rallied above the 50-day during the market's oversold relief rally in March, showing relative weakness over other market names that rallied to their highs during that same period. So in March in the market, the index and other, leading market names like that I would group in with Facebook, they had, much more powerful rallies above their 50-day. And even some were able to go towards the high of their ranges, right? So just wanted to note that, there is still a lot of supply in the stock. And then five, this was the day that I was trading it. Facebook gapping up 16% into its 50-day moving average. This is a level I'm looking at to get some type of natural selling to scalp off of. And then this is the most important slide. Like Jeff highlighted, we're going to go over how we can just improve the if-then statements and how I mess up. Before I start going through these, you can see the red arrow is where I shorted, so got an amazing entry. But then the green arrow was kind of like just a really poor exit, in my opinion, extremely poor. So one main reason for doing this playbook today was to highlight how I mismanaged my exit on this trade and review how I could have set my systems up better in the future to make sure this does not happen again. Two, levels to manage risk against are high post-market after earnings, so 210, and high of day once offers step up at the 50-day. Three, I had a textbook entry on this as using my new tape skills to see bids slow and offers step up on the opening drive at the larger time frame level, allow me to head in right at the high of opening rotation, putting me in a great spot to make money on this trade. So, I think that when I'm able to go in there and, keep my stop $1, $2 really tight, especially in this high volatility environment, I'm giving myself a chance to, make some money and get an amazing risk reward trade, just something that I think is a strength of mine, right? So I wanted to put that in there. Four, the stock trades down almost one full ATR as offers slow and bids step back up to VWAP. My plan to cover half at 200 was too rigid. So I wanted to cover half to all my position at one ATR. And when we didn't get all the way down into the 200 level, I think that was too rigid of a trading plan. I need to be more flexible and either be ready to cover that at, 250, 201, 201.50, 202. I don't want to be covering this, all the way back up above VWAP. Yeah, just so, I just think that trailing my stop at the VWAP was just very poor edge, and something that gave me good feedback to make adjustments to my systems was just getting stopped out at that VWAP. But so I think the two scenarios I could have done to kind of elaborate on for a little more would have been I'm either covering into that, close to full ATR move, or if I am going to let it pull back into VWAP, that should be a level that I'm looking to add at and get even more aggressive on when I see the offers step back up versus, covering there. That's not the spot to cover, in my opinion. So I either need to be looking for that quick move to cover, or if I am going to let it go back and retest VWAP, I need to not be FOMOing out there or not have that as my stop. That's too tight. I need to be ready to add there if I'm going to let that go back against me, right? So five, I covered into 204.33 as bids drove price back above VWAP. So my plan was just kind of stop out if price regained VWAP on the retest. And this is extremely sloppy cover that exposed a weakness in my game on this new setup. I am learning. I use this trade to decide that in the future, I need to have better if-then statements planned out so I can better take advantage of my great low-risk entries. I either needed to cover the trade for a nice one-leg move into an almost full ATR move at 250, 201, like I was saying, when offers slow and bid step back up after a fast move down. Or if I'm going to hold through the pullback, I need to just be looking to add into the 205 VWAP retest against my key 50-day resistance level when I see the offers step back up. Instead of panicking out because I did not have clear if-then statements, I did have clear if-then statements above the VWAP, but I just don't think that had a real edge. So I said that have real edge. Having more clear systems that have real edge will help me keep my emotions out of my trading so I can focus on being locked in and just executing my edge that I set up before open.
Before we get into six, I want this discussion to be about edge, because that is what we're discussing. How to make more when you have edge. You know, we're pretty fortunate on the desk to be surrounded by traders. We're fortunate in our chat to you know, the Discord group in the morning to be able to talk through specific scenarios and setups that we're talking about. The 11 a.m. meeting that's open to, you know, I think it's open to all the folks that are in the DNA and the Winning Trader or using our tools, and then all the traders on the desk. We're fortunate to be able to break down these trades, talk about kind of the catalyst that was in there, the setup that occurred, and then the different trades that show up that kind of all match together. The thing that we don't really talk a ton about is we say, you know, I'm trading with edge, there is edge at present, you know, this is how I'm maximizing my edge. You know, I know we fail to define really what edge is at times, and the reality is, I think, you know, I was confused certainly before joining the firm, and even my first little bit here. You know, what do they mean by edge? You know, the top traders are all trading with so much edge. What does that mean, right? Edge is just a word. It's just this idea that occurs in trading. You have to know what your edge is. You have to know what you do well. You know, your edge comes from this, my edge comes from this. Like, you know, that's all very great to talk about. The reality of what we're doing here is on our desk, we're allowing the setup, we're allowing the catalyst and the setup to dictate what types of trades we're going to make. When those three things line up, that is a source of edge. I love what you did here, where you had the catalyst was earnings. And it was good earnings, but it wasn't like they crushed earnings. It's also good earnings right after they had probably the biggest earnings miss they've ever had. So, good earnings, but it wasn't like they were a total turnaround story. What was the setup? It was a gap right into an important resistance area. What sort of trades could you take from that setup? That is how you create edge in your trading. What you do with that edge is what we're here to talk about today. But people ask, what is edge? It's when you stack all the odds in your favor, or as many as you possibly can in your favor. Does that mean it's going to work every time? No. Does that mean you're going to be perfect with your execution? No. Does that mean you have an opportunity to work really hard to get better, so that if you took this trade 1,000 times with a similar catalyst, a very similar setup, and then this trade opportunity, that you could get better and probably get better results? Absolutely. So let's go through moment by moment here, and we can just do bar by bar work to figure out not only how we used the catalyst and the setup and then the trade that was presented to us, but how we would really grow that. So let's start with the opening bar. The opening bar was a really aggressive spike up into resistance, right?
Yeah, and it was perfect because I had semi-tape reading skills before coming to SMB, but I really wasn't using the level 2. I was just kind of looking at kind of volume and how the order flow would come in, but I wasn't looking at level 2. So learning how to read level 2 at SMB has been a huge edge for me, because when we traded up to that 208 level and I could start to see the offers come on and the bid slow, and I could just see a huge change in character on the tape, that just gave me huge confidence to just hit it against that 50-day and high day. And it worked perfect. So on that first bar, that's what I'm thinking. And also I'm thinking too, if we don't trade up to 208, I'm not interested in this, because that's my key level and that's where I have confluence and edge, right?
That's the trade. That's legitimately the trade. You are trading for a failure at the 50-day MA. It gets up there. It has the price action and the tape that you're looking for. So you have a reason to take that trade.
Mm-hmm. Exactly.
So let's go through the next steps. You did a great job of setting it up before. So you did a great job of defining the catalyst, defining the setup, and then we had a trade. Let's talk about that trade. What do you need to see, and how do you execute that 50-day MA or failure at a resistance level trade? But let me ask you a different question. What trade is this for you?
For me, because we also set the stage with the indexes and saying that they were a little bit extended, this is going to be a scalp off that 50, right? So we're just looking for some cash flow.
So how would you define this in your trader view? What would your tag be? That's what I'm trying to get at. What would your tag be for this trade in trader view?
I would have this as a day one changing fundamentals. I would have this as
No, I would say that's the setup, right?
Yeah. I would have this as a scalp. I would have this as a higher time frame resistance, tape trade. I would have this as a gap fade. I would label this a bunch of different things.
I would get more specific than that, because all those things are nice. What could you call this trade?
I called it a day one momentum scalp off a higher time frame level.
That to me sounds vague.
What would you call it? I'm sorry, I have no idea.
And that's okay. That's why we're doing it. But we want to start tagging these things as defined trades. Opening drive, failure at resistance.
Okay.
Right? Opening drive, you know, I would think, like, you know, this is an opening drive trade, right?
Yes.
This isn't a trade where at 10:30 it rallies up into that level and then fails. This is an opening drive trade. So what are your reasons for exit on an opening drive trade? Well, they might be a little different than if it was something that happened at 10:30 or 11 or 2 or 4, 3:30 in the afternoon. So, you know, maybe that's a way to think about it.
And that's something I definitely need to really focus on. And something I'm going to talk about in my monthly review is just getting even more specific about what my setup is and getting more specific about my terminology. So that way I'm just executing my if-then statements and have my systems already planned out for that specific thing.
Okay, great. So now we've defined what trade you're making. How do you execute it?
Okay, so how I'm executing it is when you get the opening drive into the level and you see the tape, you see offer step up at the level and the bid slow down, you're shorting against that level, the 50-day, or the high of the previous day. And then for me, I was looking for one ATR move. And what I found when I was doing my review was that was too rigid because we were 50 cents off of it and I didn't cover. And so when it went back against me, 2 points really fast. I said, okay, I'm just going to use VWAP as a stop. And that was a poor decision because to me that has low edge because, you know, this thing could easily trade back into VWAP. Offers could step back up, and then next thing you know, it's going to be at the low of day. So to me, if I was going to hold it in, if I was going to hold at once we bounce off that 250 level, I needed to be more lenient at VWAP and not so quick to cover there.
How could you solve that problem so you don't have to make that decision in that moment on this trade?
You know, getting so specific about how my setups and how I want to execute them by just doing these exercises and just getting so specific about it, just getting my system written out how I want to do it, you know.
What's funny to me is how rigid you were on what you wanted to do if it worked. And you weren't rigid on what you wanted to do if it kind of worked. I'm wondering if you would have been as rigid if it wouldn't have worked at all.
If it wouldn't have worked at all, as soon as it started holding above that 50-day, I would have no confidence in wanting to fade it. I would just move on.
Yep. So yeah. So that's good. That's the most important step, is making sure I'm wrong in this, I'm out. And I'm not coming back to it because that trade is different. The second most important thing is, I'm right in this. How do I get paid? And I love that we're covering this. And I think it's important to make sure that we do, because that little pop-up to VWAP, yeah, it's scary and it's a little bit frustrating when you get almost to target and it pops feels like really far against you, particularly when you've really fought for price, you put yourself in the best position you possibly can. Then all of a sudden it's up against you and you're like, oh no. What if this goes back to the high? I was already kicking myself for not taking profits at the low.
And that's exactly how I was feeling too.
And so, that's something that you want to recognize, that feeling. But does that feeling come into play on this trade, or is it just a feeling that you had?
I think that, can you elaborate on that a little bit more?
You experienced that feeling.
Other trades or just this trade? Is that what you're trying to say?
So what I'm saying is this trade is a gap, a opening drive failure at resistance. That's what this trade is to me. How many times on an opening drive failure into resistance do you see it never come back to the high, never come up, never pop up ever?
Oh, low probability. It's usually going to go retest.
Right.
That's why I think where I covered is such low edge. It has low edge, and that's why it needs to be adjusted and playbooked and steamed out.
Yep. So that's what I was trying to get at is you have to be expecting it to pop up against you in this trade. And that's where you really need to define what this trade is. Because if you're saying it's a scalp, that's fine. Then treat it like a scalp. And if it gets within 50 cents of your exit, you're taking it's a momentum trade, you're taking it when the momentum dies, you're out. But if this is an opening drive failure at an important resistance level, that's a different trade entirely.
No, and that's what it is. So I'm labeling the trade wrong too. So that's like a whole nother huge learning lesson. And that's going to be a big focus in my monthly review.
Because you don't want to get into the habit of, I should have covered on that first move down, if that's not really what you should have done in this trade. I think your trade strategy is right. I think the broad idea of this is really good. I think you're getting two kind of trades a little bit mixed up.
Yeah.
I think you gotta give the stop high of day, especially if you fought for price the way you did and you got in where you did. I think at least a partial stop high of day.
And especially if I'm going to let it come back against me once it's bouncing off that two. If I feel like if I wanted to cover into 201, 250, that's great. But once I'm letting that bounce all the way back up to 204, 205, I got to give it high of day.
Yep.
It's just ridiculous to cover it right there, in my opinion. When I was
or a hold above the opening price. That could be like 5-minute hold above an opening price, 2-minute hold above an opening price, increasing volume on a hold above an opening price. 5-minute hold above VWAP, 10-minute hold above VWAP. Those are all valid reasons to cover as well in this trade. But I really want to make sure we're defining the trade the right way, because that's going to dictate how well we get paid in this trade.
I did watch the earnings reaction. I always try to follow the most important reports. So I did know that Facebook would be in play at the bell. But I did use SMB scanners to scan the biggest pre-market and post-market moves the night before and in the morning to see that Facebook was in play. I have a market view that I use that this came up on that is just any gapper over 3% up or down. I had an email list that updated me on everything I needed to know about the earnings. So it was giving me a lot of the key information about them spending less on innovation with the the metaverse, and then also with them beating their growth numbers. And then also I had an alert at 208 set at that 50-day in case I lost focus on Facebook. Facebook was still my focus and I didn't get off it. But let's say I lost focus and someone called out a different ticker and I started looking at something else. I did have an alert. And then this is also something that I always have open. It's my gapper scan on my TC2000. So I always have this open. It's just, I'm just always looking for anything that's making any substantial gap. I really want to watch how this is going to have an opening drive into the 208. And then you can see how fast the bids are stepping up into 208. But once we get to 208, it really slows. Yeah. And into 207, 206, it starts to slow. Well, you can see those offers start to step up at the 208. And it was so perfect. It was one of the first times the tape really, I was like, wow, this is some real edge.
And I really love, the broad idea here is, how do we make more when we're right? Mm-hmm. And, we make more when we're right by A, making sure we define, making sure we're in the right trade. And B, doing exactly what you're doing, setting up a system of reviewing your trades to know, did I take the right reason to sell for the right trade? Well, we talked about it, and it sounds like the trade that you were making was the right trade. You were just classifying it the wrong way. And it's really easy to do that, but I think it's really important.
Yeah, especially because a lot of these setups are brand new to me, and I didn't trade them before SMB because we were in such a, the first years that I traded, we were in such a trending market with all the liquidity, and like I never diversified my playbook. So the first thing I learned with SMB is I need to diversify my playbook. So a lot of these are new to me, and that is definitely my number one focus for my monthly review tomorrow, is just getting so specific about these setups so I'm not mixing stuff, right? And I think that is going to be a huge next step for me. Yep. And I'm really excited about that, honestly.
Stock selection, I give you a 10 out of 10. I thought you did a really good job picking a good stock. Big picture, 9 out of 10. Trade strategy, 10 out of 10. I think the 10 out of 10 is kind of, it's based on what you wanted to do in the trade, not necessarily how you executed it, if that makes sense. But I think the trade strategy for this trade is really good. You got a 10 out of 10 there. Intraday fundamentals, 9 out of 10. Technical analysis, I really liked your point about the looking at it on the higher time frame with the gaps and how much supply was there. I thought that was really, really good, actually, because you're right. Like, you're talking about every time it gaps up into a resistance level, there's supply. So, maybe there isn't this time, but if there is, then you're putting yourself in a really good position. So that's a good pickup that not a lot of people kind of catch all the time. Reading the tape, loved the specificity. I loved how specific you were, not just, I'm seeing it up into this level and it's kind of not acting well at this level. You were talking about the bids stepping up. You were talking about the tape slowing. You were talking about the right things. So I love the specificity there. You got a 10 out of 10. Trade management, 7 out of 10. Like,
no, that's understandable.
It wasn't that you managed it. It wasn't that your initial plan was that bad. You just mismanaged the trade. But I think a part of that was your diligence overall of understanding what trade that you were in. I'm excited that that's something that's easy to work on that you can get much better at. Technology, 9 out of 10. Love that you're using the tools we have to find really good setups. Love that you're setting alerts at really important price levels. That's really good. Review, 9 out of 10. I think we're walking away with something concrete, and that's what we try and do here. It may seem like we just kind of drone on and on about all the different trade ideas and, this is important and this is important and that is important, and, it can be confusing. The reality is, if you do reviews like this and you can walk away with one concrete thing to work on, you're going to be in a good spot. Diligence, though, sorry, a couple big misses there. You're getting a 6 out of 10. So 6 out of 10 is like not great on our desk. If you're at 6 out of 10, like those are your areas that, you didn't get a 2 out of 10, which basically means, kind of you have a tremendous amount of work to do. A 6 out of 10, it's not going to cut it though. You need to get better. And I also think on a 6 out of 10, you can get better. And I think that comes in time and exposure to our desk. So, that's kind of where we're going to settle. Overall, I'm going to give you, I think it's an 88, which, middle of the road. I think there are a couple things that are really into your strengths. I think you clean up that diligence, you come prepared with a couple different trades, and then particularly map out the trade strategy and for those specific trades, and you're going to be in a really good spot. So overall, I've enjoyed this conversation. I hope it's been helpful, and I look forward to more really good things from you.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.